person, an asset of 500 million was revalued to 800 million. What are the two accounts involved? Which one is to be debited? Which one is to be credited? I'm waiting. Anyone?
We are debiting the asset account with 300 million.
Mm-hmm. Which account are you crediting?
Revaluation reserve.
What is revaluation? Which one is revaluation? Revaluation what? So this is it. The asset value will automatically rise to 800 million, right? Which means you will debit the asset account with the excess, which is 300 million, right? You debit the excess account with 300 million and credit your revaluation surplus account, which is an income account. Do you understand? Your revaluation surplus account will be credited. It is an income. I don't know if you understand what I'm saying. Debit all expenses and losses and credit all incomes and gains. Did that make sense? Is anyone there with me?
Yes, sir, we are here.
No,
Mhm.
I didn't get that part very well. You
Which
get
of
the
it?
debiting the asset account. Then what about the other one?
You
Said you
credit
have
your
credit.
revaluation surplus account because it is a gain. Credit all incomes and gains. Debit your
Make
asset
sense.
account with 300 million and credit your revaluation account, which is a revaluation surplus. Go ahead, sir. Mr. Johnson.
Good evening, sir. Please, sir, I'm sorry, sir. This YouTube, this stuff you are doing, is it on? Are you recording it?
You just joined back?
No, I've joined since.
Okay, I said it earlier that I've started recording.
Okay, because the last one you did yesterday, you have not uploaded it on YouTube. That's why.
Well, I think the center has uploaded it and they've sent the message to the group.
Okay, but the okay, thank you.
I don't know. Okay, they didn't send the message to the group, but of course, the center has it. Shall we proceed now, please?
Yes, please.
Okay. So now, let's go to. I don't want us to waste time on this topic, please. Okay. Now, if you look at this trial balance, what are the elements of our equity that we have in this trial balance?
We have the
So
share capital,
we have ordinary share capital. Which of the share capital? Ordinary share capital.
ordinary shares capital,
Mm-hmm. Ordinary share capital
Share,
is at
P-
how
share.
much? 10 million. Did we
10
issue
million.
anyone during the year? No.
No.
Okay.
We have redeemable preference share.
We have what?
Redeemable preference share.
So that's what I'm saying.
Retained earning.
Preference share is not completely an equity.
Hmm.
I said it before. It has an element of equity and also an element of debt. That's why preference share, you can say that you pay them dividend, but in actual sense, their dividend is like an interest. You can call it interest instead of dividend. Do you understand? When you are doing your cost of capital, you record preference share as interest, not dividend. So when you say you are paying your preference shareholders a dividend, it is not dividend per se. It is an interest because they are debt holders. They have two attributes. Preference share, they are equity holders and also debt holders. So they have the element of, they have the two attributes. And that is why preference shareholders cannot vote in an annual general meeting. Are we together?
Yes, sir.
Preference shareholders cannot vote in an annual general meeting. So
So
they
you
are
said
not,
preference shareholder cannot do what in the annual general meeting, sir?
they cannot vote.
Okay, cannot vote, Abi.
Yes, sir.
Oh,
So that is what we have. Okay. Now we have ordinary shares, which is very certain here, right? We also have retained earnings. All right. Now, aside this retained earnings, if you have a general reserve, you need to bring it. Instead, you will have a revaluation reserve, just like this question has brought to us. So instead of having a general reserve, we have a revaluation reserve. It is in this revaluation reserve that you keep all aspects of revaluation, profit and loss, gains on loss, gains on or losses on revaluation. Do we understand, please? Now let's do our account. Let's solve our question immediately without wasting another time. Now, so we have to compute the statement of changes in equity, right? Statement of changes in equity, right? Now this equity is for the year 30th September, for the
Yes,
year ending
September. That's
30th September 2020, what? 2018.
2018.
Okay, now let's look at this thing. Let's do it once and for all. So, like I said, we have ordinary share, right? Ordinary share capital is also at Naira and Million Abi. What else do we have? I mentioned retained earnings
Retained
earlier.
earnings.
We don't have share premium. We don't have share discounts, right? Retained earnings and million. Then what else do we have? We mentioned revaluation, right? Revaluation reserve, which is also in million. Do we have any other thing? I guess that's all.
That's all.
That's all. So we have our total, which is also in million naira. Okay, so let's start one after the other. All right. So what's our balance brought forward?
10,000 naira for ordinary share.
Ordinary shares. Balance brought forward can be seen in our
10,000.
what's it called?
Trial balance.
Trial balance. Thank you. CB. So we have it as 10,000.
Four
What else?
thousand nine hundred.
Retained earnings.
4,900.
Okay. 4,900. What else do we have?
And
Two thousand.
93,200.
Sorry.
2,000.
2,000. And what is the total? What do we have in total?
Sorry, sir, I thought it's 93,200.
Yes, man.
Revaluation.
Oh, no, no, no. I'm not waiting for you, man.
Hello, sir.
What do you say, please?
For revaluation reserve, I thought it's 93,200.
How much do you call it?
I thought it's 93,200.
Where is it?
Is the
Now,
total
this
is
is
looking at is the total is looking at.
this is total of your trial balance.
Oh, sorry, where
Everything
the
inside.
structure is I'm using hard copy of part-time data. So it's the way they structure it on it.
Okay.
So,
So
sorry.
please, your evaluation reserve will always be on the credit side. It's just like your retained earning. Okay, all these elements we are talking about, they are on the credit side. Okay, so that is it. So we have it at 2000 naira here, and this is what we have. 2000. You can look at my screen, please. If that one is disturbing you, you can check my screen. All right. So that is what we have here. Shall we proceed, please?
Yes, sir.
Yes, sir.
Okay.
Yes, you can, sir.
Now, during the year, what are the things we paid for? Did we pay? Do we have any share during the year? Any ordinary share during the year? Do we have any ordinary share during the year?
No.
No. Okay. Then, did we sell or buy? No. What about dividend?
We
Do
pay
we have any
dividend.
dividend during the year? We paid dividend before
They
dividend.
pay the
1.2.
What do you say?
1 million,
1,200.
1,000 what?
200.
200.
1,000. Okay, now before the dividend, let's take our net profit. At least we have a net profit, Ali, which is our
Yes.
no parts. Net operational profit after tax, right? How much is that? You can see my screen here. No part.
That's
4,000.
4,540.
540, right? Now, where will
Yes.
our net profit be? Will it be on
Under
ordinary
return,
share or retained earning or revaluation?
under
Retain.
return, sir.
Retained earnings. Thank you. So it's a plus, right? So
Yes.
4540. Then nothing here. What else do we have, please? Yeah, we mentioned dividend earlier. So what is our dividend? Our dividend was paid from where?
Re-
Is it under
Retained
ordinary
earnings.
share or retained earning?
Retained
Retained earning.
earnings.
Return
How much is the ordinary? How much was the dividend paid?
1, 2.
1,200.
Where is this one? Where is that 1,200? I've not seen it though.
1,200.
Before
Where did
before
Yes,
that
after
year,
present.
before that year,
this is it. Dividend
Yes.
paid on ordinary shares, right? One two
1, 2.
hundred. Now it is a payment, so it has to reduce our retained earnings, right?
Yes.
Okay. Then this revaluation reserve nothing. Now for us to have a revaluation reserve, did you revalue any assets?
Yes.
Was it revaluation surplus or a loss?
Was a loss.
It was a
it's a
loss.
loss, evaluation loss. Yes.
Okay. Revaluation loss. Not here, not here. How much is that?
300.
Are you sure it's 300? Revaluation loss. No, we did it.
Was 900. Was 900.
Where do we have it? Please help us with that. Revaluation. Was it
Was
Okay,
not 900?
for
was
leasehold,
900.
under leasehold, it was 900. Under leasehold,
Under leasehold, where is it? Okay, so we have it in the question. I thought we solved question something on it yesterday. Okay, yeah, this is it. So 600 minus, 1.6 billion minus 800 million, right? Which will give us 800 million. Minus this. This one is what give us the 300 million, Abi. So how did we get the 900, please? Someone should remind us. Oh, yeah. This is the revaluation. Sorry, this one is disposal. Okay, this is the revaluation.
we
This is
have
the
the
asset
current price of
revaluation. Yeah.
9,005,
Yes.
and it was
Who wrote
revalued
it?
for
Here it is here. We have it here. We have it here. Information 6 and note 6. Sorry. So we have, as per trial balance, we have a revaluation of 10,000, right? Then the asset depreciated by 500 for the year. That gave us a carrying amount of 9,500. And then it was revalued to 8,600. And I had a revaluation loss of 900. All right. So 900 is a loss, I mean.
Yes.
So what do you have any other thing?
That's all.
That's all. Okay. Thank you. Please let's ensure that's really, really all low. If that is not all, that means we are wrong. Oh. Okay. So what do we have here now? Our our capital is still at 10,000. So this is our balance brought down, right? Or
Yes.
balance carried down. Sorry, balance carried down. So our assets, our ordinary share is still at 10,000. Our retained earnings has increased to 8.24 billion. Our evaluation account has also reduced from 2 billion to 1.1 billion, and in total we have 19 billion 340,000. Do we have any question from anyone? Any question on anyone from anyone? No, right? Oh yeah, now. So let's quickly go into our PPE schedule. Yes, please go ahead. Go ahead, sir, Mr. Brian. Mr. Brian, please go
Okay,
ahead.
sir, please, can you quickly emphasize on that revaluation loss? How to,
Did you join the
yes,
class yesterday?
thank
Were
you,
you in
sir.
class
Can you
yesterday?
quickly emphasize on this notice, loss on revaluation?
Were you in the class
Yes, I
yesterday, sir?
joined, but I think I joined late. I joined late.
Okay, so you
So I've
can see
already
the
done this
reason.
before I joined.
You can see the
Yes, I
reason
was
you
in class,
should
sir.
always try to catch up. If you miss any class, I know that we are still talking about that particular topic. There was no reason for you to hold it down. You have prepared for this now. That was why I sent a message this morning. Where I was when I sent that message, I wasn't supposed to even touch my phone. Do you understand? So because I wanted everyone to be abreast of what we have done. So you can imagine me being in an induction hall and also sending you a message that please go through what we did today when I was supposed to be jollificating. You understand? Okay, so let's quickly look at it. Now, there was a revaluation of accounts. One of our assets, the asset that was revalued was what? Which asset was revalued, please? Leasehold property,
Leasehold.
right? So the value of that lease now the value of the leasehold property was 10 billion, all right? And then depreciation for the year, the value was 10 billion at the beginning of the year. Depreciation for the year was 500 million, right? So 500 million minus 10 billion gives us 9.5 billion, which is the net book value of that leasehold property, right? Now that leasehold property was revalued downward to 8.6 billion. So something that used to have a value of 9.5, they are now saying that in the market too, the value is at 8.6. That means we've lost 900 million naira. So that's how we got the revaluation surplus. Sorry, revaluation loss on revaluation deficit. Okay. Now let's do our PPE, property, plant and equipment schedule, which is question C, right? I think this should be B. Am I right, please? For those who are following us, I think that should be C. So PPE. Let me write it in full. Property, plant, and equipment. Please, there's always a comma after your property. There's always a comma after the property, please. Okay, so that's that. Now, I hope we are still together, everyone.
Yes, sir. Yes, sir.
Okay. Now, for property, plant, and equipment, what do we have on it? What are the assets we have under property, plant, and equipment? Yes, can someone tell us? What are the assets we have under PPE in the question?
Leasehold property and plant and equipment.
Leasehold property and plant and equipment. Do we have any other assets there, everyone? Do we have any other assets there? Okay, no one is talking, so I assume no, we don't have any other assets there. So we have our leasehold property. Leasehold, I'll write it at that. Then what else do we have? PPE, plant and equipment. Sorry, plant and equipment. Is anyone saying? Oh, okay. We have few minutes before this session ends. I'll send in another link so you can join immediately. All right. I hope that's fine.
Yes, sir.
Okay. Good. Now, so we have our plant and equipment as well, right? Then we should have our total, which is also in million naira. Okay, now what we have under this old property, how do we do that? This thing has a practical question. Maybe if time permits us, just maybe, I'll show you one. Okay, I'll show you one. Now, when you are doing your leasehold property, if you look at this question, you will realize that this question is not using this question is using historical cost method for some of the items. Let's confirm. What's the cost? Are we giving the cost of our leasehold property? No. This one is at valuation. So they are using valuation for leasehold property, while your PPE is at cost. Now, someone can now say that why are they using uh, valuation method or fair value model for leasehold property, and then they are using um, cost method, historical cost method for plant and equipment? Why? So what the law says is that you should use the same class of account. I mean, classify assets in the same class. All right. Now, if you can get the fair value, then the fair value is more realistic. On and if you can't get the fair value, then you can use the cost method. I hope you understand that. Now, so as at the time, as at the beginning of the year, what do we have as the value of our leasehold property? We have 10,000 for
10,000.
leasehold property, right? And for
Yes,
plant and equipment, we have 15,320,
320.
right? So that's
Yes.
our balance brought forward. Please permit me to steal from here. Balance brought forward for leasehold was 10,000, and this was 15,320, right? Also, permit me once again to steal from here. Okay, now what else do we have? Did we have any addition during the year? Did we purchase any leasehold property during the year? Was there any acquisition during the year?
No.
No.
No. Do you have any disposal during the year?
Yes.
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 What did we dispose?
We goes
Plant and
for
equipment, right?
Plant and equipment.
Okay, fine. Now we have disposal. Please, that person, whether you are in the kitchen or you are cooking or you are eating, you are making the rest of us hungry. Please help us. We can't be in the class and be hungry. Thank you.
that.
Now for disposal, all right. So for our disposal, what did we dispose? We disposed of plant and equipment, right?
500.
So
Yes.
what's the value of the plant and equipment that was disposed of? The
One six.
cost.
500.
No, that is the sales proceed. That's the amount we received.
1,600.
Eh, 1,600 is. You know, I was telling you, this thing that I said yesterday, that I mentioned yesterday, plus and minus, right? This is where we have it now. Okay, now we disposed of 1,600. So which means out of this 15,000 that we have, 1,600 has left the account, right?
Yes.
Okay.
Okay. Then also our leasehold property was revalued, Abi, and we had a revaluation loss. Am I right?
900.
We had a revaluation loss on it, ba?
Yes.
Yes.
Okay, so what's the revaluation loss?
900.
900. So that's minus 900 since it is a loss. So what do we have now? Yes, any other thing? and this was nothing, right? What else do we have? Anything that has to do with the cost, please, cost only, cost. Anything on the cost again? No, that means we are done with the cost, right?
Yes.
Am I right? So this is the balance carried down. Permit me
Down
to
one.
steal from here again. Balance carried down. Okay, so this is, let me pick this as cost. This is the cost. Now, for the cost, we've taken care of the cost, right? Now let's go to the depreciation element of it. All right, let's go to the depreciation element of this our cost. After cost, we usually have depreciation, right? So what's the depreciation element? We have two things. We have depreciation, right? So what's our depreciation in this account?
Five
We have
hundred.
for depreciation as well. We have depreciation at the beginning of the year, which is the accumulated depreciation, right? Since we are using the cost method. Abi,
Yes.
am I right?
You are right. You are right. Accumulated
So
depreciation is 800.
what is the cost? What's the accumulated depreciation? And for which one?
Leasehold.
Do we have an accumulated depreciation for this one?
Yes.
Okay. Where is it?
Additional information 5.
Hmm. Okay, let's convince ourselves. Let's be sure. I know additional information file is not it. But let's go there. Let's explain it. So additional information file is saying that, oh yeah, now please read that part, that element for that aspect for us. Read it and let us explain it.
This is this is talking about. Sorry, this is talking about plant and equipment.
On October 1,
Not
This one is on
item of plant and
no,
equipment.
this one is on plant and equipment, sir. We're not talking of plant
yes.
and
Yes.
equipment. We're talking of accumulated depreciation for leasehold property. There is nothing of such. Do you know why? Do you know why?
No.
Because it is on fair value model, revaluation model, not on cost model.
Okay.
Please hold on a second, please. Yes, ma'am. No, ma'am. All right, sorry about that. So it is on revaluation, and if it is on revaluation, it means with depreciation and no depreciation, no, it has been considered. So there will be no opening depreciation for it. All right. So there will be no opening depreciation for your leasehold property. Are we together, please?
Yes,
Are
sir.
we together? So that means our opening depreciation for leasehold property is zero. Do we have opening accumulated depreciation for plants and equipment? Go
Yes.
ahead, please. So
4,920.
someone is asking a question. If you have a question, please go ahead.
Later, if I get your
Yes.
point very well, sir, are you saying that is it because you are using evaluation model to value our leasehold? That's why we are not having accumulated depreciation for it.
It's not new. It's the question
Is, it
that
what,
used
is
it.
that what you are saying, sir?
Yes, that's it. There will be no accumulated depreciation when you are using fair value. Do you get it, please? You will not have accumulated depreciation. Sorry. Do you get me, please? You will not have accumulated depreciation when you are using fair value. Because fair value simply means this is the market, this is the price in the market. It's like market value. So whether depreciation or not, that particular item, they're telling you this is the price in the market. What does accumulated depreciation mean? It means from the cost, this amount, depreciation amount has gone out of it. Then the net book value is what you presume it to be in the market. That's why I call it the carrying amount. The amount we are carrying it in our balance sheet. So someone is now saying that with your carrying amount to this is the value in the market. Definitely there is nothing like depreciation. If I told you this is the value of your phone in the market, are you saying that you will consider the depreciation again? It's been considered already, it's been factored in. All right, so that's that. Now let's come back to so the depreciation for plant and equipment at the beginning of the year was how much, please? Accumulated depreciation
4,920.
4,920. 4,920. All right, so that is that. Then also, what else do we have? Yes, do we have depreciation for the year? Do we have any depreciation for the year? Of course, we have now. We have it in our income statement. Charge for the year. Don't we have depreciation for the year? Where did we put it? We have it here. We did the workings yesterday. All our depreciations have been included in our cost of sales, right? So this 500 we have here is our depreciation for the year. The 1,920 we have here is depreciation for the year. That's what we calculated yesterday. Are we together, please?
Yes, sir.
So we have 500 and 1,920. So we have 500 and 1,920. Yes, what else do we have? Now look at this place. Do we have disposal for the year? Yes. Then also we must have a disposal here, right? So we should have, if we have an accumulated cost that was subtracted from here, definitely we should have the accumulated depreciation that will also be subtracted from here. And that was what we were saying that yesterday. Do you understand?
Yes, sir.
I'll give you the extracts now that belongs to plant and again. I'll give it to you. I'll show you in that yesterday report again. All right. So that is that. Then do we have any other thing? Okay, we have revaluation here. Now this revaluation, will it depreciate? It depends. Mr. Brian, go ahead with your question, sir. Go ahead, sir, Mr. Ibrahim.
Thank you, sir. Please, how do you get the disposal of 800 naira?
Disposal
Sorry,
of
sir.
800
How do you get the disposal value of 800 million?
disposal value care. Hey, look for my hand. It's not disposal value. We are talking of this accumulated depreciation. This is the question. This is the cost of the asset when we purchased it, in the year we purchased it. This is the accumulated depreciation, right? Which is the 800 million. Is this the 800 million you're talking about, sir? This is the accumulated depreciation of 800 million.
Yes, sir. Yes, sir. It's the one, sir.
Uh-huh. So that is it, sir.
It's the
Now
one,
we can
sir.
proceed now.
How do you disposal?
Sir?
That's actually for this.
Shall we proceed now, please?
I said it's because you wrote the.
Yes, sir.
Is
We
can
need 2
anyone hear
minutes.
him?
We need
I
2
didn't hear what
minutes.
he said.
That's the end.
Okay, no, don't worry about it. Once it ends, we'll start it again. I already mentioned that earlier. So that's the disposal, right? And after disposal, now we have revaluation here. Now, will your revaluation surplus or loss, will it depreciate? Yes, it will depreciate if the revaluation was done years back and not today. For instance, now the revaluation was given to you. The revaluation is from 2022, which was about 3 years ago, and you have not considered it. Don't forget, revaluation surplus or deficit is part of your changes in accounting policy. And everything that has to do with your changes in accounting policy, you must treat it retrospectively. But if it is changes in, what's it called? Changes in accounting estimates, then that one will have to be treated prospectively. Now, revaluation is like, a revaluation can be an estimate. Now, what will make your revaluation to be depreciated is if the asset was depreciated, I mean, if the asset was revalued at the beginning of the year in our trial balance. But if you look at this question,
Professor, sir, you can continue with the class. Professor Kazim.
I'm here, sir. I know we can continue. Just give us a minute. Let's wait for others who are still joining.
Okay, sir. Okay, sir.
So for those of us who are on the group, I sent a message to the group now. Please take your time and go through the message. Okay, there is a lot changing in our syllabus, and some of you have some questions, right? So those questions have been answered, and you can see I've sent them to the group. So for those of us who have questions on how the new syllabus would operate, please you can check some of them now. You can check some of them on the group, please. Okay, we have 9 here now. Oh, I didn't even stop my recording the last time.